What if I told you that a tax bill, yep, from Congress, might actually be the best thing to happen in California real estate in a decade? I know you're thinking, Ramin, you finally lost it. Congress helping California? What's next? Unicorns? But stick with me for the next 8 minutes, because while everyone's crying about interest rates and inventory shortages, well, there's a massive wealth transfer happening right under your noses. And if you don't know about it, you're on the wrong side of that transfer. So here's what nobody's talking about. Trump's one big, beautiful tax bill. And yes, that's literally what they're calling it. It is about the flip the script on real estate taxation in ways that make the 2017 tax cuts look like pocket change. Now, all the financial gurus on YouTube, well, they're still making videos about how you survive the 7% mortgage rates and is the housing market crashing. Meanwhile, the smart money, the people who actually move the markets, they're quickly positioning themselves for the biggest tax advantage shift we've seen in probably 40 years. But hey, why would CNBC or your local real estate expert tell you about this? It's not as clickable as the housing market apocalypse of 2025. Here's the thing they don't want you to understand. While everyone else is panicking about market conditions, the tax code is about to hand California property owners like you the biggest gift since Prop 13. And if you're not preparing for it, well, you're literally choosing to pay more taxes than you have to. Let me tell you about my client, Sarah. She's a nurse practitioner in Orange County. You know, one of those essential workers everyone praised during COVID, but somehow can't afford to live where they work. Sarah owns a small duplex she bought in 2019. Smart woman, right? Except she's been getting hammered by California taxes, and between property tax reassessments and losing most of her SALT deductions, she was seriously considering selling and moving elsewhere. Here's what Sarah's situation looked like. $180,000 household income, which sounds great until you realize she's paying $28,000 in state income taxes, $15K in property taxes, and could only deduct $10,000 total because of the SALT cap. Meanwhile, her property insurance jumped 40% last year, and her HOA fees went up another $200 a month. She was bleeding money to live in a state where she serves her community. Classic California squeeze play, right? Make good money, get destroyed by taxes and costs. When I explained how this new bill could put an extra $35,000 back in her pocket annually, not through some sketchy loophole, but through legitimate tax restructuring, she literally started crying. Not sad crying, relief crying. Because that $35K, that's her kid's college fund. That's her ability to hold on to her property instead of being pushed out by the same system that calls her a hero. But Sarah's not alone. I've got another client, Marcus, who owns a small apartment building in San Diego, 3 units, decent cash flow, but he's getting killed on taxes. Under the old system, he was paying about $45,000 annually in combined federal and state taxes on his rental income. I showed Marcus how to restructure the using the new QBI rules and depreciation benefits. His tax liability cut by 60%. We're talking about $27,000 back in his pocket every single year. That's a new BMW. That's a down payment on another property. That is financial freedom. And here's the kicker. When I told Sarah about the SALT deduction increases and bonus depreciation extensions, she said, "Why didn't anyone else tell me this?" When I showed Marcus the numbers, he said, "This feels too good to be true." Most people are still figuring out what happened in 2017. They're not looking ahead to 2025. Their CPAs are still catching up on the last tax reform. Okay, let's break this down. The big, beautiful tax bill isn't just one thing. It's a complete overhaul that hits California property owners in 4 massive ways. First up is the SALT cap elimination. Remember how they capped your state and local tax deductions at $10,000? Yeah, that's about to disappear. For California property owners, this alone could mean $20,000 to $50,000 in additional deductions annually. If you're not restructuring your holdings to maximize this, you're literally giving your money away. And every smart investor I know is already positioning themselves for this shift. They're extending 100% bonus depreciation through 2028. Translation, if you buy income property or do major improvements, you can write off the entire cost in year 1. I had a client buy an $800,000 rental property last month, which with proper restructuring, paid write off the entire purchase price this year. His tax savings, $280,000, more than enough to buy another property. But here's where it gets really wild. Number 3, QBI increase. What the hell is QBI? Well, this is the qualified business income deduction. It's jumping from 20% to 25%. And if you're smart about how you structure your real estate investments, and I mean really smart, you could be looking at an additional 5% deduction on your entire rental income. Do the math. On $100,000 rental income portfolio, that's $5,000 back in your pocket every single year. Fourth up, Section 199A expansion. All right, this is slightly technical, all right? They're expanding Section 199A to include more real estate activities. Short version, if you're actively involved in your properties and there are specific ways to qualify, you can deduct up to 25% of your rental income. You heard that right, 25%. Now, if you don't restructure before this takes effect, you'll be the one paying full taxes while your neighbor writes off a whole Tesla. Because that's essentially what we're talking about here. The difference between playing by the old rules and playing by the new ones. But here's what nobody's telling you about the timing. This isn't about 2025. The smart money is moving now because there's a window, a small, brief window where you can set up these structures before everyone else catches on. I'm seeing it already. The accounting firms that specialize in real estate, they're booked solid through the end of May. The tax attorneys who understood these new provisions, 6-week wait times. Why? Because the people who move millions of dollars in real estate are not waiting for TurboTax to figure this out. Let me give you a concrete example. Let's say you're looking at buying a $600,000 rental property in Riverside. Under the old rules, you depreciate that over 27.5 years, or about $22,000 per year in write-offs. Nice, but not game-changing. Under the new rules, with proper cost segregation and bonus depreciation, you could potentially write off $300,000 to $400,000 in year one. Your tax savings in that first year alone could be $120,000 to $160,000, depending on your bracket. That's not a typo. That's not theoretical. That's what's available right now for people who know how to structure this correctly. Look, let's face it, California's been beaten down. Wildfires, insurance companies fleeing, housing crisis, businesses leaving. We've taken hit after hit. And when everyone keeps asking, why would anyone stay? This is why. This is the first real break California property owners have had in years. While everyone's focused on the doom and gloom, we're about to get the biggest tax advantage shift in decades. You know what's crazy? I've watched clients leave California over the past 3 years. Good people, smart investors, families who've been here for generations. Well, they're fleeing to Texas, to Florida, Nevada, anywhere the tax burden doesn't crush their dreams. But here's what they don't realize, and what Sacramento doesn't want you to realize. This bill could completely flip the equation. Suddenly, California's high-value real estate becomes an asset and not a liability. Those property values that seemed like a curse, well, they're about to become your highest tax advantage. Think about it. Why do you think they're fast-tracking this through Congress? Why isn't there more resistance from blue states? Because they know. They know California needs this. They know without some kind of relief, the tax-based exodus becomes unstoppable. And you know what? I think they know it. Why do you think Gavin Newsom's been so quiet about this bill? Why aren't California politicians screaming with their hair on fire about lost tax revenue? Because they know what I know. This keeps wealth in California. This keeps property owners like you from fleeing to Texas and Florida. This might actually stabilize our housing market from the top down. For the first time in years, being a California property owner isn't just about surviving the tax code. It's about thriving because of it, but only if you know how to use it. Look, here's the bottom line. Don't wait until your CPA figures this out in 2026. Don't wait until everyone else catches on and the strategies get overcrowded. If this video helps you save even $10,000 in taxes this year, hit that subscribe button. I'm breaking this stuff down every single week while everyone else is still stuck arguing about interest rates. And here's my question for you. Drop it in the comments below. Are you planning to reposition your real estate strategy this year, or are you still waiting for permission? Because permission just got signed into law. I'm Ramin. Stop paying more taxes than you have to, and I'll see you next week.